while Wall Street professionals spend millions trying to predict the market. A simple formula, created by a professor, keeps beating them year after year. And the most surprising part? Anyone can use it, even those who have never invested before. If you want to invest with clarity, logic, and without relying on empty promises, subscribe to this channel, because that's exactly what we deliver in every video. And if this content helps you think differently, leave a like now. So YouTube understands you value intelligence over hype. Everyone's heard this before. Invest in good companies and wait. Just be patient and you'll get rich. Sounds simple, right? And indeed, it should be. But then you start investing. Watch videos, read books, follow analysts, join forums. You think you're ready. Buy your first stock, a week passes. It falls, you wait. The next month, it falls more. You read some news, panic sets in. Someone on Twitter says it's going to crash. You sell. At a loss. Then you see another stock rising and think, this time for sure. You buy. And the cycle repeats. Here's what no one tells you. The market doesn't punish you for ignorance. It deceives you with information overload. Most small investors fail not because they choose bad companies, but because they don't know why they're buying. They act on emotion, on hype, on random recommendations, and then become prisoners of a game they never fully understand. Meanwhile, the big players keep winning, even when they're wrong, even when they're slow, because they have method, logic, and most importantly, discipline. The illusion is believing you'll beat the market with intuition, thinking you'll discover the next Amazon or Bitcoin. When, in reality, financial freedom lies in the simple, not the spectacular. And here is the game changer. There is a strategy that ignores the noise, focuses on what matters, and outperforms 90% of professionally managed funds. It was created by a professor tired of seeing smart people make dumb choices. And what he proposed changed everything. Joel Greenblatt isn't an internet guru. He doesn't sell courses. He doesn't promise quick riches. He's the opposite of hype. A finance professor at Columbia, one of the world's most respected universities, Greenblatt also managed one of the most profitable funds in history, Gotham Capital. While the market returned 8% per year, he delivered 40% for over 2 decades. But what's more interesting isn't what he earned. It's how he earned it. Greenblatt realized early that the market was dominated by noise. Analysts trying to predict the unpredictable. Funds charging absurd fees to deliver less than the index. He asked himself a simple question. What if I only used logic and eliminated emotions to invest? That's how the famous magic formula was born. But the most surprising part was what he did next. Instead of hiding the formula, keeping it only for the wealthy, or selling it as an exclusive secret, he published it in a pocketbook, in simple language, explaining step by step how anyone could use it. Yes, a billionaire manager revealed his method clearly, simply, and straightforwardly. Why? Because, according to him, most people would never have the courage to apply it. And the few who applied it consistently deserved to reap the rewards. Joel Greenblatt didn't want to seem like a genius. He wanted to prove that good investing isn't about predicting the future. It's about following a plan that makes sense. And this plan boils down to 2 simple metrics. 2 questions you can ask about any company, which, when combined, create a powerful selection logic. Joel Greenblatt's magic formula is based on 2 very simple pillars. No future predictions. No fancy formulas. Just 2 questions you ask about any company before investing. 1. Is this a good company? 2. Is it cheap? Sounds too simple? That's precisely the genius. For Greenblatt, a good company is one that uses its money well. And the metric to measure that is return on invested capital, ROIC. Think about it. Would you put your money in a business making 5% per year? or another making 40% with the same invested capital. The latter, of course. ROIC is exactly that. It shows how much profit the company generates with the capital it has. The higher, the better. It signals efficiency, competitive advantage, and good management. Here comes the second part of the formula: earnings, yield. It's like looking at the profit a company generates and comparing it to the price you pay for it. Simple example: if a company makes $1 million profit and is sold for $10 million, the earnings yield is 10%. If it's sold for $5 million, the earnings yield is 20%. The higher the earnings yield, the more profit you're buying per dollar invested. Now the secret. Greenblatt ranks all companies by these two criteria. He orders them from highest ROIC to lowest, then orders from highest earnings yield to lowest, then sums the rankings of each company. Those with the lowest combined score are the best combination of quality and price. Those are the ones that go into the portfolio. Imagine 3 companies. Company A, high ROIC, but very expensive. Company B, cheap but not very profitable. Company C, good and cheap. Greenblatt's formula finds Company C. It ignores hype and focuses where real value is. The ideal, according to him, is to build a portfolio of about 20 to 30 of these companies with equal weighting. Hold for 1 year and then rebalance. Repeat the process. Over time, results show. It's simple, it's logical, but it requires what most investors lack: discipline and a long-term view. If Greenblatt's formula works so well, why don't most managers, analysts, and professionals just use it? The answer is uncomfortable, but freeing. The financial market wasn't made to be simple. It was made to seem complex. Wall Street, banks, brokerages, all thrive on the feeling that investing is rocket science. Because if you believe you can't do it yourself, you'll pay someone else to do it. And that keeps the system going. Now imagine a method so logical that any ordinary person with discipline can apply it from home. No management fees, no reliance on technical reports, no need to predict the future. That scares people because it breaks the narrative. But that's not all. Another reason is impatience. The magic formula doesn't promise explosive gains in a week. It demands investing in good, cheap companies and letting time work for you. Professionals often don't have that time. They must report quarterly, please clients, justify every swing. You, on the other hand, have an advantage. No one demands monthly performance from you. You can play the long game, and in the long run, those who play logically win. Now that you understand why this formula is ignored by the big players and so powerful for small investors, let's get to the most important part: how to apply it in practice. Step by step. That's what I'm going to show you now. Now that you understand the logic of the magic formula and why it works better than most professionals, let's get to the point. How to apply it practically. The first step is filtering companies by ROIC. The first filter is to identify companies with a high return on invested capital. There are websites and tools that show this data easily, like Fundamentus in Brazil or Finviz for the US market. You select the companies at the top of this list. They're the ones using their money well, generating consistent profit. Once you have this list, you rank them by earnings yield. That is, profit generated relative to the stock price. Companies with a high earnings yield are cheap compared to the profit they make. These are the ones worth buying. Greenblatt's formula suggests combining these two criteria and choosing the 20 to 30 best companies that are both good and cheap. Ideally, buy all with equal amounts to diversify risk. Now, the part that separates winners from the rest: maintaining discipline. Hold these stocks for at least 1 year. Don't try to sell on the first drop or sudden spike. At the end of the year, reassess the portfolio, repeat the filtering process, and rebalance. You don't need to do anything manually. Free or paid platforms do the heavy lifting for you. In Brazil, Fundamentus is a great tool to filter companies by ROIC and other indicators. In the international market, sites like Finviz or Yahoo Finance also offer powerful filters. The formula works both in the US and Brazilian markets. But remember, results are not immediate. Have patience and focus on the long term, to 3 to 5 years, to start seeing concrete results. The magic formula is simple, but that doesn't mean it's easy. Actually, the biggest challenge isn't the numbers, it's you. There are 3 fundamental pillars supporting this strategy that make all the difference in the results. First, discipline. Following the method even when the market seems to collapse. When everyone panics, those who stay calm and respect the formula are ahead. Discipline is resisting the temptation to make decisions based on fear or greed. Second, patience. Investing isn't a sprint, it's a marathon. Results take time to show and may even seem contradictory in the short term. But that's exactly the time that turns a simple investment into a growth machine. Third, simplicity. The temptation to complicate is huge. Reports, tips, gurus, trends. Everything seems important. But the truth is simplicity has enormous power, clarity. When you simplify, you eliminate noise and focus on what really matters. Without these 3 pillars, even the best formula in the world can fail. And the small investor's advantage is that they can build this mindset because they're not tied to deadlines, reports, or immediate expectations. You can learn to be disciplined, patient, and simple. And it's precisely this mindset that will allow the magic formula to beat Wall Street professionals year after year. Here's the truth almost no one tells small investors. Winning in the market isn't about predicting the future. It's not about knowing which stock will explode tomorrow. It's not about following the hype of the moment. And certainly not about blindly trusting gurus' guesses. Winning is about having a clear plan, a tested method, and above all, the courage to follow it. Joel Greenblatt's magic formula isn't magical because it's complex. It's magical because it's simple and works over time. You don't need to be a genius or have privileged access to play this game. What you need is to understand what really matters, quality plus price, have discipline to follow the plan, and patience to wait for results. And that's the advantage professionals don't want you to have. Because when you master this, you become the owner of your financial future. No longer a slave to luck, the market, or sensationalist news. Financial freedom is within reach of those who decide to act with intelligence, simplicity, and focus. Don't expect the big players to tell you this formula. The secret is in you. Now, if you want to turn this idea into real results, I'll show you exactly the next step to start safely and strategically.